You need to be an expert to invest. It is a quick way to make money. You have to know when it is the right time to buy. You have to regularly monitor your investments. You have locked your money away for years. It is too risky. All these myths come in our mind when we think about investment. Investing means many different things to many different people. Investment opportunities are varied and have a common perception as something for the financial needs. With money to spare and expertise close to hands depending on your investment budget and interests, there are the range of options, but one thing is clear. Investing is open to all. But when you're investing through financial markets, you need to know so many things about financial markets. For example, what is the word financial market and what is its structure? What are the financial market participants, their interaction and function in the system? Economic indicators of the financial markets, because if you know all about financial markets from fear related to questions, get through with your mind. Hello friends, welcome to my YouTube channel, Safa's World. Our today's topic of discussion is investing with financial. When reading about financial markets and how you can earn money from them, do you know what are the actual dealing with? Banks, insurance, funds, financial funds, the list of structures that make up the financial market is long enough. This video will provide you better understanding of the financial market, its structure and how it operates. The first thing, the structure of the financial market is all the national and international markets make up the financial market. It incorporates banks, pension, insurance, currency funds, and many other economic institutions that help up to create and redistribute funds. The first essential business structure of financial market is the forex market, forex market. This is the market in which the subjects of the participants' transactions is the currency and everything that is related with equivalent derivatives. Instruments may also serve as trading instruments, for example, currency, CFDs, depending on the form. The settlement there can be cash and non-cash. According to the transaction term, the market can be current, spot, and derivatives currency markets. Futures feature pricing based according to the movement of currency exchange rates. Intermediaries in exchange guarantees are the reserve deposit, options, and currency swaps. Currency transactions can be performed both on the exchange and on the over-the-counter market, forex, interbank market, forex. Now, the second that comes in the structure of the financial market is debit and equity market. Folks, a firm or an individual can obtain funds in a financial market. The most common method is issue a debt instrument such as bond or mortgage, which is contractual agreement by the borrower to pay the holder of the instrument's fixed dollar amounts at a regular intervals, interest and principal payments until a specified date, or you can say the maturity date. When a final payment is made, the maturity of a debt instrument is the number of the years terms until the instrument's expiration date. A debt instrument is short term if its maturity is less than a year, and a long term if its maturity is 10 years or longer. Debt instruments with maturity between 1 and 2 years are said to be intermediate term. The second method of raising funds by issuing equities such as common stock, which are claims to share in the next income, or alert expenses and taxes, are the assets and the business. If you own one share of common stock in a company that has issued 1 billion shares, you are entitled to 1 millionaire of the firm net income and 1 billion of the firm's assets. Equities often make credit-wide pay means dividends to the holders and are considered long-term securities because they have no maturity date. In addition, owning stock means that you given a portion of the firm and thus they have the right to vote on issues in what the firm and the elected is directed. Although the size of the debit market is often larger than the size of the equity market, and the average person is more aware of the stock market than the other financial market. Now, what are the securities? It suggests a complex interaction between the market participants in terms of insurance and turnover of securities. Securities can be traded on both stock exchange and beyond that. On the exchange, you can trade only in listed assets that which meet certain requirements. Assets can be stock, bonds, indices, derivatives, ETF securities. Stocks can be common stocks and preferred stocks. Holders of common stocks still have voting privileges, whereas the holders of preferred stocks may not. However, preferred stockholders receive a fixed dividend from the company, while common shareholders may or do not receive one, depending on the decision of the board of directors. Bonds can be issued at companies, municipal issuer, local authorities, state, international. For example, Eurobonds bonds can also be preferential. The holder will be among the first to receive money during the creation of the company. That subordinated, more profitable, more risk. There is a graduation of the focal rate and to maturity. Now, indices. Indices are the consolidated instruments consisting of a basket of securities, which reflect average price statistics for the set period or for the industry return. Derivatives. Derivatives, they are the derivative instruments which make up a monthly-level system of securities. ETF securities. An ETF is an index fund whose shares units are traded on an exchange. The fund investment structure can be any one, ranging from the securities of companies in a particular sector to be diversified portfolio including stocks, gold, etc. Unlike shares of investment funds, you can perform any operation with ETF shares as well as with the security. Now let's talk about the money and capital market. Another way of distinguishing between market is one the basis of maturity of the securities traded in each market. The money market is a financial market in which only short-term debt instruments, generally those with original maturity of less than 1 year, are traded. The capital market is the market in which long-term debt, generally those with the original maturity of 1 year or greater, are equity instruments are traded. Money market securities are usually more widely traded than the long-term securities and so tend to be more liquid. Short-term securities have a smaller fluctuation in prices than long-term securities, making them safer investments. As a result, corporations and banks actively use the money market to earn interest on surplus funds that they expect to have only temporarily. Capital market securities such as stock and long-term bonds are then held by the financial intermediates such as insurance companies and pension funds, which have little uncertainty about the amount of funds they will have available in their future. There is another more general but the more exact classification of the world market: the currency market, the stock market, and the commodity market. The first one includes all the operation with many currency, including cryptocurrency. The second one includes everything related to securities. The third one provides trading patterns, while goods and services including non-controversial investments, etiquettes, art, etc. All three markets are connected by credit, investment, and other relationships. The forex market often combines different financial markets. For example, you can trade various CFDs such as metals, oil, shares, and stock indexes. If you're talking about all the about financial markets, you start your career in the financial markets. Thanks for watching Mustafa's World.